want to give you guys confidence, based on statistics, based on seasonality, that we're in the right direction, right? That's the first part of it. October for crypto, even if we go on a Mastermind report, has historically been a better month. So we go over here, we look at, come over here and we have the somewhere we had a volume. October, the average has been some of the biggest months, right? And 36% down. Could they get there? Could Bitcoin go from 20,000 to 10 or 12? It's possible. But, historically, October, November, December, gives us good returns. So I wanted to go over the seasonality just so we kind of can see it right here. October, November, December also show high, median return. So, without all the trading, I can skip a day of trading because we've planned it out. And some of the vacations, right? Some of the vacations I take, are based around what days is going to give me the least probability of making money. And then I'll go away and those are days I plan with the family. So this way I'm around during the high probability days. That is what we mean by having a trading plan. If you haven't got that, does anybody here have trading rules that they actually look at and follow, right? One of the trading rules is, I don't like losing $1,000, or more on a trade. I think, me testing out this automation, it was the biggest loss I've had this year, testing a thing. But like normally I would stop trading if I'm down on a trade. Normally 500 is max. And so, some of the rules that you have is designed that should be catered towards you. Like some people, they always win on Wednesdays, right? And so my wacky Wednesday and their wacky Wednesday is different because we trade different. Start setting up some of the rules that you can actually implement. If you have a lot of things going on, Wednesdays and Mondays, I don't eat. I don't eat, right? So, I don't eat because I don't have time during the calls that I have. And so if I'm fasting, I don't eat. And so I'm not going to trade on Monday night and Wednesday night, knowing that I'm tired. I've had calls. I don't have any food. Like I'm not set up. I'm not in an optimal position. All right. So secondly, all right. So once I do the seasonality and I kind of have my bias, I look at the Mastermind, I may go look at, some astrology calendars, right? So for like October, right, I'll look at and I'll see some high volatility. I got my plan, my Excel, I do this all by hand. I go through each day, and some of the big days when I know that, it's, historically, I go through each day and I look at the market, I look at what's happening. I'll come here and I'll say, all right, historically, we have new moons or full moons, a couple of days before we start seeing volatility, right? And so tracking this, and then I'll go to my calendar and I said, does it match up, right? Does September 9th or October 9th match up with, all right, it's a full moon, or, and just to be transparent, I got a whole folder of when I do the Mastermind report, it doesn't take me, I spend more on a report than I do on actually trading. So when I have a Mastermind report, I go through and I look at a lot of these sites, the different astrology. I look at, the tools. I have different news I read. It is a lot of analytics that go into going through each day, right? Monthly horoscope screeners. And then even last year, right, at October 2020, what was looking at then, I saved some of the things and I'll go through and I'll see what happens. And then I'll go through my Snagit, right? I have a Snagit here, right? And I have a library. Every screenshot I ever taken, right? I can go to the days of last year. So, people have trading journals, right? But if I take a screenshot of things that I'm doing on each day, right? So I can go to August 28th of 2022 and be like, all right, what was I looking at then? I'll pull it up. Okay, this is what happens. it broke out alert, I was looking at this or whatever. I actually have a library. So that's one of the reasons I take so many screenshots is that I can go back to each month and I can go down to last year, right? This is 2022. I got another computer that I have, the 2021. This, I just reinstalled this right now, so I can't show it here, but on my other laptop, I have all the different years, right? And it shows you, the years and the dates, and you can go back. So that is another tip or tool, is that the screenshots, you can put in folders, right? So when I go down to my folders and I got October, right, of 2021, October of 2020, right? I go through all the things that, I've looked at, and it serves as a trading journal. So I know a lot of people don't keep the trading journal. You're in the DCG. Everybody should know how to trade September next year, right? If you stay in DCG for a year, 2 years, you have all this information that you stored. That the longer you can stay into trading, the better you become, because you've done it already. It's like the first time around a track, it's going to be a little bit, you're going to go slower. You're not going to know, how the track is. The second time, it speeds up. The third time, it speeds up. You make more money. Like, that's what happens in trading. The longer you can stay involved, the longer you're actually trading and going through the exercises and collecting data, right, the better you become. And the more confident you can become with taking days off or trading certain days and going in heavier. Like, you don't have that experience in the beginning because you haven't had enough screen time or research. So the seasonality, all the things that I'm sharing is what I use to put the report together, right? Last year during this time, we're having a meetup somewhere in DCG or something. It becomes cycles as well. When people come out, when they travel, that's it. Looking at these patterns of return will help you identify. So if I was in a trade like Jazz Pharmaceuticals and I got in October and it went down, and you start seeing these sharp spikes up, if I can hold to November, historically it's been up during this time. So buying this low, knowing that, hey, I have a couple of days, or I want to buy these red days on the 15th, and I wanted to get rid of it on the 20th, or maybe the 18th, or maybe the 16th. As long as I'm profitable, I'm just trying to use the data and analysis and the trading to make me a more profitable trader, right? I mean, isn't that the goal? It's not to get the day-to-day right. It is to say, hey, I want to get good trades. So buying during a red day and holding towards, a couple of days and say, hey, I got 3 or 4 other days to get out. So if I buy on the 15th, historically 16th, 17th, 18th has been a little bit higher.